All right, so to bring you guys through a little bit of my thought process on when I'm taking a trade, what I'm looking for. I'm in a gold short right now, and so I actually started the morning bullish biased, but that switched once I saw one key thing happen, and I think that's really important and why I wanted to talk about it, is you can have a bias going into the day. You should have a larger point of view bias on what direction you think we're going to go based on the analysis you're currently seeing from pre-market or prior day price action. And now don't get me wrong, gold is very bearish. So if we go to, let me switch this over really quick. All right, let's go to 20-day 1 hour. Gold has been bearish since about 5 a.m. This morning. Now, that was off rejecting, I'm not up that early, but that was a really nice rejection near some KPLs I've got at 33.61 to 33.6220. Now, going into this morning, I didn't see this candle. When I was coming in, we were between 7 a.m. to 8 a.m. That's when I usually start to look at potential setups for the day. And we were near a potential support area, which is this trend line. We also had a SMA right there. We were looking like we could potentially bounce just like we did prior looking left. But the important part is once we reach that level, I always wait for a reaction. And then if I get the reaction I'm looking for, I will then take that trade. I don't just automatically take the trade when we reach that level. So let me show you what I mean. This was my original plan this morning in Discord. So everyone knows that my bias becomes invalid if these KPLs and key levels I have on my chart break, for example. So in this example, I had a green little loop right here showing that I wanted support to hold at 33.4170, and then I was looking for targets above. Now, I always have a point where my plan becomes invalid because I don't know what reaction we're going to get here. I'm just waiting to see. And so if we don't get that reaction, then I'm waiting for the new reaction to then react. So I think a lot of traders get it wrong. We're doing really well right now. I'm going to go ahead and move this down. All right, risking very little now. I don't want to go break even just yet. My target is down here near like 33.1680. So back to what I was saying though, is I do not like to just automatically buy or sell when we get to a level, right? I need to see a reaction. And I think a lot of traders miss that part. Like you're supposed to see a reaction. You're not supposed to react immediately. You're not waiting for the reaction. You're just hitting a buy or sell button without actually seeing what's happening at that level. So I originally went into today with that plan based on the price action I was seeing, but once price action developed and I allowed it to hit that level, see how we reacted, we held the downtrend, we didn't have buyers there, I then decided to flip my bias because at that point, based on the reaction we saw, which was resistance forming underneath that KPL I've got at 33.4170, and how do I know it's resistance? Look at that reaction. That's resistance. That's sellers there. That's huge selling pressure. So once I saw a reaction like that, that means I'm no longer going to be bullish biased and I'm going to switch to a bearish biased based off of that reaction. So I think that's really, really crucial. And again, it's something that's very overlooked by traders is y'all are not allowing the reaction to dictate your trade. You're just reacting before you can even see the reaction. Let's see how many times I can say reaction in this video. But yeah, I just wanted to point that out to you guys. So right now I'm short biased to 33.1660 is my KPL. But I never put it right at those levels. I put it either a little bit above or below. But let's see, we had a really nice doji print near this key level range I've got of 33.3620 to 33.3480. So that gave me confidence to size in on a short. So gold does move pretty fast. It's very volatile. And at this point, I'm just gonna trail my stop. So another thing that I see traders doing wrong is y'all are not trailing your stop. You're just allowing your stops to sit in the original place. Now, this is a controversial topic. I personally am all for trailing your stop. If the move is going in your favor and you're seeing momentum, don't let that trade go from you being up, let's say $1,000 to down $1,000. And if you're trading something like prop firms, you cannot do that because you will have to deal with the trailing threshold and you have to make sure you're securing profits in the direction that the move is going. I'm a big fan of break-even trades too because you can always get back in. So it is a balance act. You don't want to move your stop too soon, but once momentum picks up, like for this example right here, this is momentum picking up in my direction. There is no way in heck that I'm going to leave my stop way up here. No, because if we start to move back over break even at this point, there's no reason for me to continue to be in that trade. Or I can just look for a re-entry if we retest from my original entry area. But so far we're looking really good to the downside here. And once again, I came into the day looking bullish, but I flipped bearish because I started seeing reactions that was going against my original plan. And so you have to stay flexible. You can't marry your plan. You can't marry one direction and go into that day and be like, no matter what, I'm only long, or no matter what, I'm only short. I mean, I guess you can do that, but the reality is if you marry one direction and we start to go against that direction, you just have to make sure you're not fighting the trend. So trade with the trend, not against it. If you like to trade reversals, I personally do. One thing that I had to learn along the way is you're not trading reversals against a trend that is very obvious. And when we're getting to potential areas where we could reverse, again, you're just waiting for the reaction to then tell you if it's a reversal or a continuation trade. I think fighting the trend is one of the easiest ways to lose a bunch of money in the stock market. This is looking really nice. I did take a loss on oil. It wasn't a huge one, a couple $100. So this is definitely making up for that. And while we're letting this play, I can actually go show you guys really quick. So oil, I was guilty of fighting the trend this morning. So oil has been a very tough one for me just because I really wanted to see 63.73 hit. So I will admit, I've been a little bit married to that level, and I still think we're gonna hit it, but I can't fight the trend. If I do, I'm gonna just give the stock market money that it doesn't deserve. So overall, what I was doing this morning is seeing tons of resistance right here. I took a short entry. It was very low risk. Took a short entry right here. Stop was high of day. So when we caught support, moved back up. I just got stopped out. But I will look for a re-entry if we start to break back below like 65.60. Because again, I really wanted this level to hit. So I'm just going to keep watching for shorts if we break. But there is no reason, again, to fight the trend. Took that loss, moved on, and now we're killing it on gold. So that's another really good tip. Honestly, I just feel like a lot of times when I'm making YouTube videos for you guys now, I'm just gonna sit here and ramble and yap about things that I have learned along the way, because a lot of you guys seem to really like that. So if you don't want to hear me yap, then sorry. But another thing that I had to learn in my 8 years of trading. I was really stubborn in the beginning where I don't like to lose. I don't think anybody likes to lose, especially if you're a trader. You're probably competitive. You probably just really like winning, right? Who doesn't like winning? And losing is just, it's really hard on your emotions. It's really hard to bounce back from a loss when you're super confident on something. But one thing that I found has just done really well for me, and I've talked about this frequently on my channel, is having a 2 times rule. So oil, I've actually lost on 2 days in a row. And so I just keep in my head, I'm like, you know, it might just not be working right now on oil. Like I usually do really good on oil, but lately I've had a hard time reading it. And there's been tons of news with Iran and Israel. So guess what? I'm just going to move on to something else. If it's not working, if it's hard to read, there are other things to trade. That's why I'm not a huge fan of you guys, or like for example, I'll have some members in Discord just say, I'm only trading NQ, or I'm only trading oil, or I'm only trading gold. And I mean, if you want to do that and that's working for you, great, but I'm just not a fan of that, because some days I'll see a really clear, larger point of view chart on gold. Other days I won't. Some days I'll be really clear on oil for a week, 2 weeks straight. Other weeks I won't. So I don't like to say I'm only trading something, because honestly for me, it just depends on the larger point of view chart, and that's what I trade for that day. So we are definitely doing really well. I don't want to let too much go here. We're flirting between 4 and 5 grand, but I'm going to try to see if I can stick it out for this target. And you can see this is my plan that I posted in Discord at 10:19. I am not a fan of trade alerts. I think trade alerts create very follower type traders, which you're never going to be successful if you're just blindly following somebody. I want to create independent traders. I want you to just see my plan and you know the strategy to a T, and you know exactly what I'm looking for. You know when I'm looking to exit, enter. You just know my brain. Like I have tons of trading journals right here. I mean, just tons. which are very precise edited trading journals, which are usually on average 10 minutes. And they explain my entry exits and they tie my strategy together, and it's ongoing education. Because one thing I could not stand is, like, a lot of people love live trades and watching live trades, but I didn't have time back in the day when I worked a full-time job to just sit there and watch an hour and a half of somebody talking about the trade that they're waiting to take or are taking, or I don't know, I just wasn't a fan of that. So anyways, I have trading journals which go back and explain in depth why I entered where I did, why I exited. I also try to make these free videos on YouTube for you guys. I just try to really do my best to show you my thought process as much as I can, because I know when I was first starting to learn trading, that was what helped me the most, was just somebody just sitting down and yapping like I am right now, and seeing their thought process through that trade really, really helped me. I'm a big, like, why are you doing what you're doing type person, and so just watching videos on the strategy doesn't really help me that much. I want to know why. Why'd you enter? What were you thinking? Why'd you exit? Why did that work? Why did that not work? And again, you don't get that from just blindly following someone's alerts. I definitely started yapping too much and did not pay attention, and now we're coming back up some. One point I was up 5, now I'm only up half. All right, that was testing my patience a little bit, where I'm gonna go ahead and move my stop to, like, right here at this candle high. 33.2970. Another tip that's really important, I usually don't have my P&L on. I have it on when I make content for you guys so you can see, but I do not like having my P&L on, because I almost just exited that trade when I really shouldn't have. Based on my trading plan, based on how I usually trail my stop, I'm not gonna lie, I almost hit the close button, but I trusted the process, I trusted my strategy. But yeah, not a fan of P&L being seen on the chart. I think it just does nothing but help promote more emotional based trades. You get fixated on a number, then you don't want to sell because your highest P&L was not matching, what you're seeing now. Then you're more likely to move your stops. Like, just having your P&L on is really not healthy if you're struggling. But it doesn't bother me that much anymore, but it still gets to me. Like, seeing your trade go from 5,000 all the way back to 2,000. Yeah. Now, another thing is if you're using prop firms, you really don't want to do that. So, by the way, speaking of prop firms, I have partnered with a prop firm. If you guys are interested in trying them out, they're a way that you guys can trade futures with a small amount of money. I am partnered with Apex, and so if you guys want to give them a shot, just wait for an 80% off sale and use the code Peachy, and you can get a 50K account usually for like $34. But if you are a complete beginner and you don't have a strategy and you haven't back tested, please do not go buy an account, or if you do, just paper trade first, because you're just going to be throwing money away if you have no strategy. All right, we're going to go ahead and move this down again, 33.28. Oops, I cannot spell. Now, there's too much consolidation right here, so I'm not gonna sit here for too much longer and give back. Yep. Okay, that was like a solid $3,000. At this point, when I see dojis like this in consolidation, I'm good. So, a little over $3,000, could have been $5,000. When you're trying to let a trade breathe, you just have to get used to, again, don't even look at your P&L, because the old me, the really competitive me, would want to jump back in because I'm like, oh, I left $2,000 on the table. No, don't ever think of it like that. You do not have profits until the profits are secured, and that's why not looking at your P&L can be very, very helpful. Just saying. Oil is just straight ripping. So I think I'm done for the day after that, honestly. Yeah, I'm feeling good. I don't want to force it. It's a Thursday. Usually as we move into the end of the week, price action just gets a little bit worse for me. So as we move into Thursday and Friday, I really try to tone it down. And if I get an A+ setup, I usually don't even trade Fridays. So I would consider that an A+ scalp. I hope this yapping was helpful for you guys. If you liked it, let me know in the comments and I'll try to yap more during my trading sessions, because I feel like that's a much easier way for me to get content out for you guys. And like I said, some of y'all seem to love these style videos. and find them super educational. I hope so. Anyways, yeah, if you guys are interested in the Discord and you want more from me, because I can only be so active on YouTube, I am active in Discord every single day, Monday through Thursday. Fridays are iffy, but I do have a support team. I have other analysts in there that have learned from me. So you guys will always have the support you need. I have courses A to Z, complete beginner to advanced traders. We've got boot camps, 7-day boot camps where you can learn things like charting and technical analysis, my advanced trading strategies, my scalping strategies, how I trail my stops. I've got everything in that program. It's literally an all-in-one. But yeah, if you guys are interested, check the link in the bio. I also have extra free resources in the description. I will tag those as well, free workshops for you guys. And don't forget that we have a Peachy Investor newsletter, which sends you a free weekly recap of the need-to-know things in the stock market, what happened that week, what you need to pay attention to next week. So if you guys want to sign up for that, that link is also down in the description box. And don't forget, if you want to try out prop firms, Apex Trader Funding, code Peachy will get you 80% off when they're doing a sale, which they are right now when I'm shooting this video. So hope you guys enjoyed it, and I'll see you next time.